Hi everyone. I suppose in our community, one of the most kind of highly asked or kind of prominent questions is determining the lot sizes on indices. So obviously we know the calculation of indices, commodities, FX are all done very, very differently through the MetaTrader trading platform. And I think it's important that obviously with the likes of your FX pairs, you do tend to have fairly straightforward calculations and tools and calculators for it. But there doesn't seem to be any calculators available for indices. Now, we obviously have our own risk metric in terms of calculating the risk. But for those who maybe don't have that software or maybe haven't used it before, what we're going to do now is we're going to actually take you through how to calculate the risk on the indices for MetaTrader. Broadly speaking. So hopefully this will be a very, very useful video to you. Of course, if you have any questions, please do feel free to reach out to us afterwards as well. So I suppose the first key kind of determinant when you're setting up, I suppose, taking a position on maybe the S&P or NASDAQ or any one of the other equivalent indices, there is a kind of two or three kind of pieces of information you need to take into consideration before you actually jump into executing a trade, right? The first thing we need to obviously look at is the account size, right? Account size, first and foremost, is one of the most primary things that needs to be taken into consideration, okay? The second thing is knowing what your overall risk that you're wanting to, I suppose, allow on the trade is ultimately the second most important. So risk per trade is the second key equivalent. And then the third key equivalent is after you've done a piece of analysis, knowing the size of your stop loss. Okay, so there, I suppose, from my perspective, kind of the three primary pieces of information you need to know before executing a trade. So that means you know your account size, which you can break down your risk into both percentage and monetary terms. And then when you've done your piece of analysis and you're looking to execute a trade, knowing the size of your stop loss is the next key equivalent, right? So if we take a sample example here, we've got the S&P 500 just as an example, and we're going to deem that obviously on MetaTrader as the SPX 500 or US 500, depending on the platform you're using. So just use that as an equivalent, right? So we're obviously taking the first kind of piece of information into equivalent. Let's say you're doing a verification or a challenge, or you're even funded and you're on $100,000 account. Okay, so let's just put that in as the account size, right? The second piece of information we're then looking at is obviously the risk per trade, right? So normally speaking, just going to actually put in account size here just so people can follow it along. So with the risk per trade, it's normally 0.5%, 1%, 2%, whatever it is. Okay. Now, as a rule of thumb, I personally speaking from a trading perspective, I follow that 1% rule. So the broader consensus is that all my trades are no greater than 1%. In normal circumstance, if you want to do 0.5%, that's perfectly fine too. It's whatever is within your risk purview. So at least that way, then you're kind of staying within your risk metric. So if we look at 1%, right? As the example, okay. So 1%, we know that 1% of 100,000, very, very quick calculation is $1,000. Okay. So that's the kind of the next key determinant, right? Risk per trade is the next key determinant, right? So first of all, we know our account size. Second of all, we know what our monetary risk. So if this trade goes against us, what's the worst possible damage that can happen to your account, or what's the worst possible effect and that will happen to your account, right? So if we're taking that S&P example, right, and let's say we've done a particular piece of analysis and we're looking to sell it at, I'm just going to use a round number here as a hypothetical scenario. Let's just say 3,700, okay, and we have the stop loss. So stop loss at, let's say 37.50. Okay, let's just say maybe you're a swing trader and you're adapting that. Okay, so your stop loss is 37.50, and just because we do that kind of normally, TP is TP take profit. I'm just going to put in the full abbreviation. Take profit is, let's say, 3,600. Okay, so just using that example. Okay, so what is the position size on MetaTrader as a result? Well, the position size is always the risk per trade. Okay, so the position size equals risk per trade divided by the size of the stop loss. Okay, so that's obviously the very, very easy to identify, because we know in this example, the stop loss is 50 points because it's 50 points above the selling entry. Okay, so with that example, then if we go $1,000 divided by 50, I'm just going to put in points. That equals what? 100 divided by 50 equals 20. Okay, so that is $20 per point equivalent. Right, now, in terms of knowing the lot size, right, if you go into the details screen on your application, so whether it's on the desktop, whether it's on the mobile, I suppose, software you are using, you can very easily determine what the lot size is. So if you go into the details screen, I'm just going to pull it up here on my mobile device. Just bear with me 1 second. USB 500 detail screen. We can see that contract size is 1 in the detail screen. So that basically means one lot is equal to $1. Okay, so for every point of movement, a one lot position is either $1 higher or $1 lower in your P&L, right? So if we're risking $20 per point, well, then we know if you're risking $20 per point or $20, we know that equals 20 lots. Okay, so very, very simple calculation. Okay, so I suppose the kind of the fourth element there is knowing the contract size is ultimately important, because let's say, for example, if the contract size wasn't one lot but was maybe 10 lots, okay, that would mean that that would mean that if one lot was equal to $10, let's say, if there was 10 in the contract size, that would mean that a 20 per point would mean 2 lots. We'd have to divide the position size by 10. Okay, so that's I suppose a very, very straightforward example how to apply a calculation. It's just a quick mathematical calculation. Within, I think, about 30 seconds, you would be able to work that out. Now, if you're on the desktop application on MT5, when you execute the trade, as an alternative workaround, you can also move your stop loss up and down. And within that measurement, it'll actually give you the monetary loss as well. So if it was a case that you had 1,000 or 1,500 or 2,000 as loss, you can actually move it up either as well. But if you're ever looking at the mathematical calculations as to how to find out what a position size should be, this is how you do it. Okay. Of course, there might be questions following up on that, particularly if it's other asset classes, let's say like gold, for example. So I'm just looking at the gold asset class with Alpha Capital. The contract size is 100, right? So that obviously means that instead of having $20 per point, it's effectively on 20 lots, you are dividing that by 100. Okay, so that's effectively going to be much, much lower as a result. So that's how we kind of look at it. That's how we break it down. Of course, if you have any questions, feel free to reach out to us, and we'll obviously be more than happy to help with that. Thank you, everyone.